Okay, are we live? We are live, and I think we are actually fine.
All right.
Wait.
So
we are live, and I think we are actually fine.
that sounded good.
All right. Wait, we're back. We're back, baby. All right. Sorry about that, guys. Let me just share the link to everybody that missed the first stream. We are back. All right, good. Crisis averted. Let me know in chat how good the stream is. It might be the resolution might not be the highest, but that's hotel Wi-Fi for you. So we'll be back with our normal setup next week. Some of the team is in the same place this week in a hotel. There's no other way to stream it outside of the hotel Wi-Fi. So just bear with us, all right? It's an important moment in the market. So even with low res, we got a lot of stuff to talk.
Analysis here. So obviously, as many of you know, we had a fairly historic week here. We crossed about 67.2K for Bitcoin's market value. And with that, we are officially in retrace mode right now, back at about 63.3 based on our latest data.
I think we're down, Brian. We're now in the last like 15 minutes while we were trying to fix the stream. We have dipped below the 62K resistance, so we are now at 61.8%.
Yeah,
61.8K. Yeah. Sorry, we were too busy with the stream to watch Bitcoin melt.
Yeah, so we are on a, I guess we would call that a mid-paced retrace right now. And with that, the markets are going to be quite volatile now. Ethereum is showing just a bit over 4,000 after getting above 4,300, at least officially on CoinGecko. It indicated that we were at a very, very brief all-time high for the number 2 asset as well. So with the top 2 assets in crypto, both eclipsing an all-time high, we see plenty of market action, many projects soaring, not too many in the red, but there are a few. But we'll be going over a lot in terms of on-chain, social, and whale behavior today. And overall, this has been a long time coming. We have seen, at least over the past 3 months, pretty consistent rising utility indicators for Bitcoin at minimum, if not for a lot of the top 100 market cap assets. So with all that being said, I'd like us to kick things off with a little bit of analysis on the circulation and address activity end. With Bitcoin going up to, of course, above 67K, circulation has been at an increased pace as well. We got to basically the second largest circulation day since the 7th, and besides the 7th, these were the best 2 days of total circulation since late July, and that's pretty significant. Overall, we can clearly see the uptrend here. Let me maximize it, give you guys a clearer view. We saw an uptrend that basically started in mid-August for circulation, and this was after, the big dip caused circulation to fall. This was, of course, the circulation as a reaction to the huge dip, as people decided whether to buy the dip or panic sell, and there was a ton of polarization at this time, followed by obviously a big drop in circulation that really got to its bottom around early July, had a temporary upswing, went back down around here. But since then, this is what we want to see, a nice gradual rise back to where we were, to where basically we were in the last all-time high interval in mid-April. So with that being said, we can also check out how circulation looks from an NVT perspective. And what NVT does, for those unfamiliar with this model that we have, it will calculate the total market cap of any coin, in this case Bitcoin, and divide that by the circulation for any given day. In this case, we're looking at a macro view for a monthly basis. So essentially, as you would kind of anticipate, red would indicate bearishness, orange semi-bearishness, yellow neutral, yellow green is semi-bearish, and ultra green here would be bullish. We are in the first semi-bullish month since February of 2021 as we were soaring. And once we got into the red, if you look at just the white line here showing the average price throughout the month, as soon as we hit red, the following months began to retrace, which is why we like this model so much. When there is not enough circulation, aka unique tokens being moved on the network, we're typically going to see a retrace, if not a bunch of volatility at minimum. And once we got back into green, blast off and we hit this new all-time high. So clearly the increase that we started to see back in, I guess we would call this, the first big indication was on the 26th or so when we started getting this cluster of large circulation days that we hadn't seen since late July. That's really what allowed us to propel upwards, and combined with address activity, which I'll get to in just a moment, was a clear indication and a provider of nice alpha that we could actually climb to the prices that we really didn't see since April. Anything
Brian,
you'd like to add on that? Yeah.
Yeah, I think your NVT model was bullish like 2 or 3 weeks ago already. I think.
Yeah, it really kicked
right?
off October right away with some bullish.
I remember
indication.
us talking about it about 3 weeks ago for the first time in a while. It was on a very small sample size, like a week. But after like 5 months of all red, seeing green for the first time sort of indicated that, at least from a network perspective, there was finally some justification or some support for a rally. Now, let's talk about this latest spike. Go back to the Bitcoin circulation chart. Now let's talk about today's or yesterday's latest spike in circulation. So as you can see here, there has been a big spike in the amount of unique BTC that are moving on the blockchain. So generally speaking, this can be a good sign if it is happening over a prolonged period of time. So when you see sort of a sustained, a slow but steady uptick in Bitcoin circulation, that means that on average there is more network or sort of value creation on the network on a daily basis. So from an on-chain perspective, this is what you want to see. You want to see a healthy adoption, and growing interaction with the particular coin on a daily basis. Now, this particular spike, I would take it with a grain of salt, simply because it is likely prompted, it is likely not super organic. What I mean by that, and it's most likely going to revert back to some level in the next couple of days. So I think if you, Brian, for example, if you show us the network profit loss chart for Bitcoin, what we're going to see is we're going to see a few big spikes in network profit loss as well, in particular on the profit side. So what this metric tries to show is it tries to tell you that what is the sort of total profit or total loss of all units of Bitcoin that are moving on the blockchain on a daily basis. Essentially, what this metric tries to do, or the way that we calculate it, is that we take each unit of BTC that is moving on the blockchain, and we take the price at which it was last moved, and then we take the price at which it was moved today or on a particular day, and the difference between those two prices for all daily transactions becomes this metric. So basically, big spikes in network profit loss to the upside suggest that the units of Bitcoin that are moving on that day are moving at significant profit relative to the last time they moved on the blockchain. So it can indicate sort of periods of profit taking and people sort of taking some profits off the table, selling a bit, and this is what we have seen over the last couple of days, specifically I think October 20th and 21st. So this is also why I think we are seeing sort of an uptick in circulation, is that some people seem to be taking a little bit of profit. I generally don't think that this is a super concerning signal. Yes, like if you go back, Brian, go back to the last year of data, and you will see a few spikes in network profit loss around local tops. Like these things happen. So yeah, we can see it in February, we can see it in March as well. Several times in the past, and then back in May eventually as well, right? So several times in the past year, there have been sort of big spikes. Yeah, go ahead, Max.
Okay. Did it just drop off, or have we been off for a few minutes?
Sorry. Brian is, yeah.
Yep, I'm just screen sharing and checking the stream.
We seem to be back, I think. Yeah. We seem to be back. Okay. So, all right, let's just recap. Guys, if this happens once again, so we seem to be back. For now, the stream is stable. We can't control Hotel's Wi-Fi. So if there's another sort of drop off in the network quality or stream quality, or it starts buffering again, we'll probably just have to abandon the stream and just do another one next week when we're all back home. If that happens, don't leave the stream immediately. We're not going to end it. Instead, what I'm going to do is I'm going to write some general observations about Bitcoin based on our current metrics. So we're not going to, leave you empty-handed, even if I just have to type a bunch of stuff in chat. That's how we're going to talk about metrics. So we're going to talk about Bitcoin one way or another today. But let's very sort of shortly resume with network profit loss. So what I was saying, I don't know when I got cut off, but what I was essentially saying that on October 20th and 21st, so a couple days ago and 2 days ago, we have seen sort of a massive uptick in the network profit loss for Bitcoin. That suggests that units of BTC that are moving in those 2 days have been moving at a massive profit relative to the last time they moved on the blockchain. This indicates a period of profit taking, which is similar to what we've seen back in several local tops in February, March, and May of this year. This happens. This is completely normal. I think that it's a short-term top indicator, but I don't think it's necessarily sort of a knife in the back of Bitcoin and sort of the death cross for its rally. I think we might be due for a little bit more of a correction. I'll talk about several other reasons why I think so. But in general, I think profit taking is healthy in a sort of midterm context, simply because you don't want to see excessive greed on the market. And we have actually seen quite a bit of market euphoria and signals of market euphoria in our charts over the last couple of days, which, led me to believe that, a local top might be approaching, which it obviously has. So this is one indicator that I think is the reason why we're seeing a pretty big spike in token circulation over the last couple of days, because more units of yes, there's a lot of unique units of Bitcoin being moved on the blockchain, but it seems like plenty of that is speculative in nature, and in particular might refer to some profit-taking activity. So Brian, let's talk about a few other signals that have sort of pointed out that we might be looking into a short-term correction. The second one that we can continue sort of speaking about network activity first. So what we've seen with the Bitcoin's daily active addresses, I'm not going to spend much time on it, but what we have seen is that over the last week, there has been sort of a divergence between Bitcoin's on-chain activity in terms of the amount of addresses that are actually interacting with BTC and Bitcoin's price action. So we've talked about this a million times in the past. Generally speaking, what sustainable rallies look like from a network perspective, from an on-chain perspective, is that sustainable rallies like to go hand in hand with a steady uptick in daily active addresses. A lot of people use daily active addresses as sort of an on-chain proxy for the amount of demand in the coin. And I have this imaginary milestone of 1 million daily active addresses that I like to keep an eye on. It might be fairly, arbitrary, but it's something that for me is a pretty decent line to sort of gauge where we are in terms of Bitcoin's network activity, specifically because between January and May of 2021, there have been like less than 7 days in which Bitcoin's daily active addresses have actually dropped below 1 million. So it took us quite a while to go back above that level after the correction. We finally did it in starting in September, when this is when we really started talking about the fact that Bitcoin could once again start breaking out, because there's finally some on-chain justification, network justification for the rally. So in the last week, that has not been the case. In the last week, Bitcoin has actually once again struggled to keep above that 1 million level. In fact, it has dipped by about 15% in daily active addresses since the start of the in the previous 7-day span. So overall, while Bitcoin's price was going up, the amount of interest or demand in the interaction with Bitcoin's token has actually been declining. So that was a short-term divergence. If you pair it with increased sell-side pressure, which some of the signs are there in on-chain data, it seems to have suggested that we might be looking at a pullback. So now today we are seeing quite a big spike in daily active addresses, but this is, I think, a product of the current dump or current pullback, where I think some people might be panicking a little bit. So yeah, we'll see what happens. I think this was sort of another reason why I thought in a short term, Bitcoin's voyage into price discovery might not be that it might be short-lived. There are two other metrics that I actually three metrics based on which I thought were the strongest in terms of red flags or yellow flags for Bitcoin. So let's start with the one that I used as thumbnail for this video. It's social sentiment for Bitcoin. So a lot of you know that are watching the stream every week or every couple of weeks, that we use the weighted social sentiment on another platform, Graphs, right, instead of on Sandbase. So what we were finally able to do is we were able to port that metric back onto Sandbase. So you can now use it on Sandbase under weighted sentiment / total. So what this metric shows is it shows the total it shows the average mood of all mentions of Bitcoin that we have collected from about 1,500 different cryptocurrency related channels. So this includes Telegram channels, crypto subreddits, Twitter accounts that are related to cryptocurrencies, and other sources of information. So we take I think we collect about 100,000 daily messages every day. And so we take all of those mentions or messages that are related to Bitcoin, and we parse it through a machine learning algorithm that labels them as positive, negative, or ambivalent. And so what ends up happening, or what is the result of that sort of a machine learning process, is we get this chart, which shows us whether the average mood towards Bitcoin based on hundreds and thousands of messages is positive or negative. As you can see very clearly, the sentiment towards Bitcoin has been super bullish shortly after the all-time high. Actually, it's been the highest since the beginning of the May correction, suggesting that indeed people were becoming mega euphoric about Bitcoin, at least in the short term, right? So what that usually points out, obviously there's no silver bullet, but if you look at the previous, Brian, just hover over for a second over the previous all-time high for Bitcoin back in April, it was sort of a very similar scenario where all of a sudden there was this massive spike in social sentiment, suggesting that the average retail investor is increasingly confident about Bitcoin breaking new ground, going to 100K, 200K, all of those stories that start making rounds immediately, right? So this was another sort of suggestion or a point of contention for Bitcoin's rally, letting us know that there might be a need for short-term normalization of the price so that the crowd can chill out the retail euphoria can disappear and people become a little bit more skeptical about Bitcoin once again, because historically speaking, Bitcoin or like bullish sentiment has not been a great friend for Bitcoin or any other cryptocurrency, really. So based on our data and some of the backtests that we've done, extremely bullish sentiment usually coincides with local price stops or sometimes periods of price consolidation. It rarely, or more rare than usual, like marks a point of a price uptick, because what that spike indicates is that the market is a little bit overvalued and undersold, and as a result we might be looking at a period of price normalization. So that was another sort of pretty significant or sort of concerning factor. Basically the same idea is also seen in Bitcoin's funding rates, right? So that was the second big metric that I thought was pretty concerning yesterday and the day before. So if you look at Bitcoin's funding rates on Binance and BitMEX, by the way, we are planning, like spoiler alert or teaser alert or whatever, we are planning to add a few more derivatives or sort of data from a few more exchanges, derivatives data in particular, in the next couple of weeks. So stay tuned. Currently, we have support for Binance and BitMEX's funding rates, but other high volume exchanges are coming. So do we already have FTX? All right, great. Then I don't need to come around the bush. So we have already added FTX funding rates on as well for Bitcoin, Ethereum, and other coins. We are planning on adding additional exchanges or funding rates from additional exchanges too. But let's focus on Binance and Bitcoin, and BitMEX right now. So alongside this breakage of, if that's even a word, of all-time high, we've seen a pretty significant uptick in the funding rates for Bitcoin on BitMEX and Binance and Huobi, which was which saw the highest funding rate in about 6 months, OKX as well, FTX as well, Bybit as well. So pretty much there seems to have been a relatively strong consensus to the upside in terms of funding rates across high volume exchanges. So for those of you that don't know what this metric does, essentially funding rates show the fee that is paid by one side of the perpetual contract to the other. What that means is that when the funding rate is high, it means that on average, Bitcoin longs are paying Bitcoin short. So the derivative market is bullish or increasingly bullish on average. And then on the other side of the aisle, when Bitcoin's funding rates are very low or declining below zero, that means that the Bitcoin shorts are paying Bitcoin longs. And in general, or sort of overall, the market is bearish. The consensus is more sort of skewed towards fear and uncertainty. So looking at this chart, you can see that increasingly high funding rates have not been very good for Bitcoin in the past 6 to 9 months. They have several times coincided with local tops as well as all-time highs for Bitcoin. So even though the current funding rates are sort of a far cry from what we've seen back in February and January, I still think they have been relatively concerning. Also keep in mind that there have been many changes in the way the derivatives market operates between now and January. So, back in January, you could go, 100x on Binance and FTX. You can no longer do that, right? So there have been several sort of reasons why we would see relatively lower funding rates today than back in January, and still can consider them a concerning signal. Right. So overall, I usually use this chart similar to social sentiment. Like when I see spikes in funding rates, I think, okay, the market is becoming increasingly bullish, right? And generally speaking, when the market is no longer experiencing any fear or uncertainty about the coin, that's the time when a coin might be experiencing some pain, or a market might be experiencing some pain. So that's the second, very yellow flag that I saw as far as Bitcoin's potential. And then finally, Brian, let's talk about the 30-day MVRV ratio for Bitcoin. So I like to use this metric a lot. Those of you that are not familiar with what this metric does, essentially it tries to, using some assumptions, making some assumptions based on on-chain data, it tries to show the average profit or the average loss of all addresses that have acquired Bitcoin in a certain period of time. So the 30-day MVRV ratio, what it does is it shows the average profit or the average loss of all addresses that have acquired Bitcoin in the previous 30 days, right? So swing traders, short-term holders of Bitcoin. And Brian, you can sort of zoom us out to the last 3 years of data, just so we can see historical patterns for this metric, because usually this is how on-chain analysts analyze this metric and use this metric in their sort of strategies. So essentially, the higher the MVRV ratio is, currently it's 11.4%. What that means is that the average profit of all addresses that have acquired Bitcoin in the previous 30 days is 11.4%. So that's how much they are up on their initial investment relative to the last time those coins were moved between addresses, right? So the way that people use this metric, that on-chain analysts use this metric, is they look for historical highs and historical lows. So the higher the MVRV ratio gets, the more unrealized profits there are within that certain group of holders, and therefore the more likely it is that they're going to start claiming those profits, realizing those profits, and liquidating their exposure or sort of mitigating some of the risk, right? And then the lower the MVRV ratio is, the more underwater they are, the less incentive there's going to be to sell, and the more undervalued the coin is, according to this metric. So these very sort of low levels of MVRV, historically speaking, an opportune time to accumulate. So with that being said, Bitcoin's 30-day MVRV ratio has, over the last 3 to 5 years, really shown a tendency to peak between plus 15 and plus 20%. So that seems to be sort of a line where short-term Bitcoin holders seem to like taking some profits. So between 15 and 20%, they're like, all right, time to me to put some money off the table and mitigate some of my risk and reduce my exposure a little bit. So as you can see, there have been several times in the past that Bitcoin's MVRV ratio has grown above this point, all the way up to 40%, but that never lasts very long. It lasts for a couple of days to a week most, and in general, it points to a period of time where we're suddenly mega overvalued, and there's a need for short-term sort of price correction and price normalization. So back yesterday, actually the day before, we were at, I think, plus 18.5% for Bitcoin's 30-day MVRV ratio. So we were very much in that zone between plus 15 and plus 20%, where historically, there we go, 18.2, historically people liked taking some profits off the table. So it's not a surprise to me to see that there has been a coinciding correction. Actually, I thought there might be, we might see a little bit more upside before we correct, simply because, as you can see, for example, back in January, there were a couple of days where, Bitcoin was able to maintain an extremely high MVRV ratio before we really started dumping. But, it still follows the pattern that has been established over the last 3 or 4 years. Plus 15, plus 20% seems to be the danger zone. And yeah, we crashed. So now, Brian, where are we at? Are we at around 11%? Are we still dumping? We might want to refresh the chart because let me zoom in a bit. Where we are at the moment. Yeah,
it looked like about 11.4 on that 3-year chart, but we'll get a little more granular here. And where we're sitting now, yep, 11.4 is correct. Okay.
So yes, 11.4. Which is still, I'm not gonna lie, it's still pretty high. Yeah. Oh, are we still live? I think we are. Okay. I saw a buffering logo for a minute. Guys, please let me know in chat if we're still. Okay. Please let me know in chat if we are still live, just so that I'm not talking to the wall. Are we still live? Okay. Because I'm seeing buffering on my end. All right, I'm just waiting for somebody in chat to confirm. Yeah, but in the case that we are off stream, I want to write in chat first. Write some analysis in chat. Buffering. Okay. So, all right, we seem to be buffering. see. Okay, still buffering. Sorry about that, guys. Let's see if we're still live or not. Now, good. Okay, we're back. Apparently, maybe, hopefully. Oh boy, the buffer is back. Just shoot me in the face. How about that? All right.
Max, if necessary, it could be worthy to refresh the entire OBS setup.
I mean,
like
it seems like no, we're.
Yeah, I mean, as long as there's enough juice from the Wi-Fi to kickstart the stream again, because sometimes it has to hit a certain threshold to start, which is why a restart can sometimes be the solution.
Yeah, I think we can no longer continue. So, what I'm going to do? Yeah.
Chat disagrees. They can hear us again?
No, it's just that they think the buffering can be managed, but I don't think it can. I think it's too difficult. So let me wait. We might be back live. Oh, wait. Yeah, one sec. Okay. So it seems like we are back, at least on my end. I'm seeing us returning. All right, Brian, I think we can push a little bit further, and then hopefully this stops happening. All right, let's talk about the MVRV ratio. So we talked about the fact that it's at 11.4%. That's still high, is what I wanted to say. Generally speaking, we're not at the sort of proverbial danger zone, but we're still quite high. As long as Bitcoin's MVRV ratio is like above 10%, I would be slightly cautious. That being said, if there's enough sort of buy the dip pressure, and if other fundamentals look okay, Bitcoin can still make a bounce back fairly, reliably, even with the MVRV ratio being high. But the ratio has been high for like a couple of weeks now, so we might be looking at a slightly stronger correction for the ratio to sort of completely normalize, maybe back down to I don't know, 5% to 0%, somewhere around that level before we can see another leg up. So,
and Dino, we did just get a refresh, by the way, and it's down to 8.5 now after this pullback. So
can you refresh on the price? Just refresh the full page so we can see what the latest price is. Is it like 61.5 still, or is it even lower? 61.5. Okay, cool.
Yeah.
Anyway, so these are the three metrics that I thought were fairly catastrophic, fairly dangerous for Bitcoin. So social sentiment was very high. MVRV ratio was definitely in the danger zone, and then the funding rates were also extremely high. So overall, these three metrics are still in the upper echelons of activity. What that means is that we might be, for the time being, still looking at another sort of slight correction before these metrics are able to completely normalize, and we can say that there's a healthy amount of network activity again, and potential for another bounce back. For now, these metrics are still looking kind of iffy, Brian. We can also show what the whales are doing for the moment, just to kind of give a sense of where the large addresses are are heading into this all-time high breach. And I think, Brian, you're showing a few different groups there.
Yeah.
Do you want to tell us what it is?
Individuals, and what we're looking at now is the merged addresses that are combined between 100 to 10,000 Bitcoin in those respective wallets. If we look back to September, this is just the last month, so I'll zoom out a little bit to, we'll just go to last year. And what we can see here is overall a pretty nice rise. If I drew a line, just from here to where we are now, very clearly we're on a nice uptrend with plenty of volatility in between, particularly after the April all-time high, where Whales started to take profit right before that 64K all-time high at the time, and that led to the eventual mid-May correction. Once the correction took place, look how we accumulated rather quickly, we as in those whales, of course, and then eventually we got up here, a little more profit taking, followed by price rising. So this would be considered kind of a bearish divergence when the whales are moving down and the price is moving up. And eventually we see that dip here and then another dip here. And this, of course, is a false signal where we actually had some internal whale movement going on. But even without that, if we canceled out this big line here, we can see clearly that there's been mild accumulation ever since, where whales have been.
And more importantly, there hasn't been a offloading event yet, right?
Right, exactly. There's no sign of these 100 to 10,000 Bitcoin wallets actually taking profit as of yet. There was a little bit of a concern here, but it was quickly scooped right back up. And that eventually was part of the proponent leading to this new 67K breach. With that being said, whales are looking strong right now in terms of the key millionaire holders where there is a lot of active trading going on. If we go past the 10,000 point, there's often a lot of exchange addresses and the data can be a bit muddy.
Yeah, and generally speaking of exchanges, the good news is that the supply of Bitcoin on exchanges, at least according to our metrics, are still low. Like, we are not seeing a concerted effort to move Bitcoins back to exchanges, which would suggest a increased sell side pressure. So overall, Bitcoin's total supply on exchanges actually remains quite low, or is plateauing / slightly declining over the last couple of days, which is hopeful for like the long-term long-term potential of this rally. Now, I also want to talk about two more metrics that are a bit concerning. Sorry to be a party pooper, but there's just a lot of poop around. So let's briefly, Brian, talk about a few metrics that have nothing to do with Bitcoin directly, but that might have a lot to do with what the market is feeling and how they're feeling. So let's go over MakerDAO's metrics that we like to keep an eye on in these types of situations. And the first chart that Brian is showing here is the total debt or total DAI created in the MakerDAO ecosystem. So as you can see, we are now right at the precipice of the new all-time high of total DAI created within the MakerDAO ecosystem. By total DAI created, what I mean is a lot of people have, over the last couple of days, deposited some collateral into the MakerDAO CDPs and have minted DAI from the MakerDAO ecosystem. So if you go back, if you go down one chart, Brian, we can actually see exactly which collateral was used to mint all of this new DAI. And this big purple spike today and yesterday actually shows that a quite significant portion of that new DAI was created by depositing wrapped BTC into MakerDAO CDPs. So that might be a little bit confusing, but essentially what that means is that a lot of people seem to have put wrapped BTC or deposited wrapped BTC as collateral in MakerDAO CDPs to take out DAI. So what is the potential reason why they would do this? And the potential answer is that some of these people want to leverage long on Bitcoin in particular. So if you already have Bitcoin, one way to sort of double your investment or to gain more exposure into Bitcoin is you put that Bitcoin, first of all, you wrap it, and then you put that Bitcoin into CDPs, and you take DAI out of the CDPs, and you buy more Bitcoin with that DAI. So it's essentially sort of like you're almost doubling on your initial Bitcoin investment. So that's another time or sort of another signal that we are in fact seeing quite a bit of market greed and market confidence, which in this case, in terms of DeFi participants, which is also not what I like to see. Now, you will see that there have been several sort of big spikes in that created back in like early October, which have coincided with local bottoms. But if you go one chart lower, Brian, which is going to show the amount of debt repaid, you will also see that those two spikes happened. You will also see the same two spikes around the same time. So what that means is that it was probably arbitrage or whatever DAI was created around those local bottoms. It wasn't used to like buy more BTC or Ethereum or whatever. It was almost immediately repaid back into the MakerDAO ecosystem. So probably some sort of, somebody looked for or found some arbitrage opportunities that they wanted to exploit. So another signal that for the time being, the market is still quite bullish. So we'll see what happens an hour or two, a day or two from now. But for the time being, yeah, there are some concerning signals about where the market's headed is at this point, Brian.
Yeah, I mean, you've summed up the MakerDAO metrics here well, and I'll be transparent. I think Dino's the expert on this more so than myself. But a few other things that we can briefly go over. Obviously, we touched on weighted social sentiment. One thing to add on MVRV is look how accurate the 15% line has been just over the past month. Really, every time we've gone past this 15% threshold, that's been a top, at least temporarily, until things generally cool down. Obviously, a little bit of an exception here as we stayed above 15%, but eventually when we got to that high point of about 18.2, big drop off. This one was obviously the mild retracement here, mid-sized retracement here. So these, I really do like how MVRV is leading the way right now as a good indicator. I'll also mention that we have this danger and opportunity divergence table, which of course is not showing as I try to demonstrate it. But if you do have access to it, I'm going to try to refresh it really quick while I explain what it does. It's going to essentially take all of the MVRV timeframes combined, 7-day, 30-day, 90-day, 365-day, put it all together and try to essentially calculate what the average divergence is between historic indications and where it sits right now. And when it's in these danger zones, like we're showing for 30-day, 90-day might have more like a 30% or above as the danger zone. We calculate that all based on historic evidence, and then we blend it all together and we can get a divergence here. Just trying to get a few more of these loaded. We'll see if it'll pop up here. All right, whatever. It's not working right now. It could be, who knows how many.
It's just a connection, yeah. But
yeah.
In general, I think what we would see, right, Brian, we would see quite a lot of high MVRVs these days.
Exactly.
Right?
So you're going to be seeing, if the bars were to load, a lot that are near the danger zone or at least halfway to it, which is represented by this dotted line here. Altcoins were actually looking quite good last week. For those who remember what the markets were looking like just a week ago as we were climbing near the all-time high, Bitcoin was really getting a lot of dominance at that time. And as soon as the all-time high was breached a couple days ago, it started to cool off, of course, a little, while altcoins have been kind of mildly taking off. And obviously, I know we have some questions where we can address a few of the assets that our community wants to look at, but pretty universally, some altcoins have been starting to make some headway and make up ground that Bitcoin had been making on its own prior to this week. So we can definitely sort of shift into altcoins now.
So let me just, before we possibly go off stream again, let me just try to summarize where I think we're at right now. I think this is a healthy pullback. I think it was a needed pullback, specifically because the crowd was starting to become super annoying in terms of their euphoria. The derivatives market were becoming over-leveraged long. So I think that's also it's healthy to flush them out a little bit. We have seen on-chain metrics even outside of Bitcoin's own network and ecosystem to suggest quite excessive greed. We have seen spikes in short-term profit taking. So all of this combined, no surprise to see a little bit of a pullback. Now, moving forward, what I would keep an eye on. So for the time being, Bitcoin's exchange metrics remain relatively dormant. So there's no, as far as people moving Bitcoin en masse to sell, to moving from their addresses to known exchange wallets, they're not doing that on a network scale. So there's no sort of capitulation. There's no network-wide effort to sell, which I think is good. It seems like it's only happening in pockets of the market. So I would keep an eye on Bitcoin's exchange or supply on exchanges and exchange inflow and exchange flow balance. Those metrics to keep an eye on whether the exchange or sell side pressure really starts ramping up, which might lead to another sort of correction. I would also keep an eye on what the whales are doing. So actually, over the last month or so, they've been relatively dormant. Like the amount of BTC in those extremely large addresses, millionaire addresses, has picked up a little bit, but really not all that much. Like it was a very silent vote of confidence. So the question is, what happens with this pullback, right? Are they going to start finally taking some profits because we were unable to move into price discovery for more than a couple of hours? Or are they going to stick by Bitcoin for the time being? If they start offloading some of their bags, it might also be a bearish signal for the midterm for BTC. The last thing that I would keep an eye on before we're still live, which is great. Last thing that I would keep an eye on would be Bitcoin's network activity metrics. And I think this is actually going to be a very important topic. So daily active addresses and token circulation. Both of these metrics are spiking in the last couple of days, but they're not spiking because of organic use of the Bitcoin network. They're spiking because of price fluctuations and massive market volatility. So what's going to be interesting to see is what happens next week. So over the weekend, it's almost certain that we are going to see a decline in Bitcoin circulation and daily active addresses, because that always happens. In general, less people interact with the Bitcoin network and any network over the weekend than they do throughout the work week. What's going to be very interesting is seeing where Bitcoin's on-chain activity metrics, so daily active addresses and unique token circulation, where they end up on Monday and Tuesday of next week. Do they show some sign of strength, relative strength? Do they continue to move in an upward trajectory, suggesting that there's more value being created and accrued on the network, which generally is what on-chain wise we want to see when it comes to sustained price rallies? Or do they fall back down? Are they not even able to sustain that level of 1 million daily active addresses? Do they fall back down to 950, 900, 850? We've seen all of those levels over the last couple of months, and they've been relatively bad for BTC. So that would be also like a last group of metrics to track. What's going to happen with Bitcoin's network activity? Is it going to show signs of strength, signs of increased demand in BTC as an asset, or is it going to fall back down to earth or even lower? So, okay, we're still live. And I think, Brian, at this point in time, we also have your model loaded, right?
Yeah, really briefly, if anyone wants to see exactly what I was referring to before, it just looked like it was a quick data line error that I fixed, and it's all functioning as correct now. Mostly the big coins, you can see Bitcoin here, semi-overbought, Chainlink semi-overbought, Ethereum semi-overbought. A lot of these MVRVs are looking to be mildly in the danger zone right now. But some of the smaller cap assets, like look at synthetics, storage status. Keep in mind, most of these are going to be ERC20 tokens. So if you're looking for Cardano or Tron, just to name a few random ones, they're not going to be on this model yet. At some point in the future, Santiment may have the data to plug into this type of thing. But for now, it's going to be Bitcoin, Ethereum, Binance Coin, Litecoin, and then essentially ERC20s. But you can change the assets that show up here to focus on any ERC20s that you'd like to show up here, and you can get some pretty quick automated information that you can check in on a daily basis. And maybe Max can share the link, or I will myself toward the end of this call. So people who have Sandbase Pro can simply plug right in, go to add-ons here, Sandsheets, enable your API key, and you should be all set after making a copy of it. So that's it from my end, and we can jump into alts now if you'd like,
Yeah, well, this is what I want to hear from chat. So everybody that's still in chat is a freaking champion in my book. So this is your time to shine. What coins are you keeping an eye on? I feel like, yeah, a lot of people want to know about Bitcoin, but I feel like even more people have like a specific alt that they have in mind and that they hope is going to outperform Bitcoin at the moment. So let us know in chat, right? Yeah, go ahead, Max. Okay. Okay, sure. So we have a bit of a higher stream delay, which means that when you submit your answers in chat, it might be a couple of minutes before we actually see them and can respond to them. Still, just do it now and we'll get to it in about 5 minutes, right? So like I always say, bonus points for coins that live on the Ethereum blockchain. If you want us to analyze those, we have more data for those. So for on-chain, for Ethereum-based coins, we also have an extremely comprehensive on-chain data coverage, so we can look at things like daily active addresses, exchange flows, what whales are doing, network profit loss, MVRV, and a bunch of other metrics. Still, if you are interested in a coin that we currently don't have on-chain data for, that's fine. We can still analyze it from a social perspective. We have social data for any coin in our database, more than 2,000 of them, so we can at least figure out whether the crowd is talking about them more than average, which might be a concerning factor, whether the crowd is super bullish about them or super bearish, where they stand, and finally, we can also look at their development activity, just to kind of, make sense of where the project is in terms of the amount of resources that they're expending in keeping the project alive. So if you have a specific project, a specific token that you want us to analyze right here live for at least a couple of minutes, let us know in chat. So Ethereum, maybe, I don't know. I know a lot of people usually ask us about Cardano, Polkadot, Solana. I think sometimes we get questions about Matic. Are those the coins that you're currently looking at? Is there something new on the market that you want us to take a look at? Are people still talking about Shiba Inu? I don't know. You tell me. So, all right, we're starting to get first questions in chat about, or sort of first suggestions in chat. Brian, before let's give it a few minutes just so the sort of answers pour in. While we're waiting, anything to add for Bitcoin? I feel like we're covered all of the metrics that I wanted to cover, but am I missing something?
We didn't touch on inflow yet. We could definitely look at that for just a moment. Inflow and outflow.
I think we can just look at the supply and exchanges. It's more stable than
Sure.
inflow and outflow. Yeah.
Switch to Bitcoin here. I'll take off. Well, we'll leave on Tether just because it's interesting along with it. Tether,
sure, yeah.
Here in pink is staying quite dormant, at least for now. Obviously, there's some deception to the Tether supply and exchanges because of the arbitrary amount of minting that goes on and changes this up on a moment's notice. But overall, when it stays down, that's an indication that there isn't at least on average, not as much buy potential as there would be when you see things up here. There is some mild correlation when you see Tether's supply up high and then price following by going up, and then vice versa. When Tether is down, that is an increased sign that price will stay down. That being said, the more important one would be Bitcoin supply and exchanges, where we've seen a clear downtrend all the way since about May 18th or so, to where we are now, sitting at about 12.6%. Keep in mind that number is up for debate, but overall, based on whatever number is showing, when we see, based on the addresses that we follow, a clear decline, regardless of whether this is actually 14.3% or something a bit higher or lower, this is an accurate downtrend in supply and exchanges that we can report on, indicating that there is decreased chance of Bitcoin having a major sell-off because there are simply less coins on exchanges to sell. So overall, this downtrend that we've seen over the past 5 months is a good thing for the bulls out there. It means that there is, at minimum, less historic chance of a major correction in Bitcoin's price due to a large sell-off or series of large sell-offs occurring.
It's the same thing for Ethereum, at least at the moment. The total supply of Ethereum on exchanges is just staying flat. So on a network level, or sort of on a market level, better to say, we're not seeing any sort of concentrated effort to sell or to move their Ethereum to non-exchange wallets. Now, it's also worth noting that I expect that the supply on exchanges for Bitcoin is just going to keep dropping over time, simply because there are more use cases for BTC now than there ever were before. Whether that's just, like I said, minting some wrap BTC or rent BTC or whatever you want, and then making use of that Bitcoin on the Ethereum blockchain, whether that is to, like I said, maybe put it into a CDP and take some DAI out and then go double long on BTC, whether that's to put it in a yield aggregating platform, farm some yields, provide some liquidity, whatever it is. There's more ways to use Bitcoin now than there were 2 years ago. So I expect the supply on exchanges overall for Bitcoin to continue to decline. What I also expect is to see the amount of tokenized Bitcoin on the Ethereum blockchain continue to grow. So those two things, I think, are probably going to keep happening over the next year or so, which is going to impact the way that this metric looks. It's also going to impact how important this metric is, right? So we might, instead of looking at the total supply on exchanges, we might need to at some point revert more to looking at the exchange flow balance on a daily basis to figure out what is the difference between Bitcoin moving in and Bitcoin moving out, to really zoom in on those short-term sell-off periods. I think that's all that I wanted to talk about as far as Bitcoin's concerned. As far as at least our metrics are concerned, obviously there's a lot more. Like from a TA perspective, I've heard some people talk about 58K as a potential resistance, but I don't want to get into that. I don't want to get into specific resistance lines, simply because it's not, it's not what we usually do on these streams. All right, we've got a bunch of questions now in chat. Max, can you tell us what is the what are a couple of most popular coins that people want to analyze? Want us to analyze? Okay. Okay. So ETH, Chainlink. Yeah, I see a few different ETH mentions. Yeah, Lampol, but I also see it from IA as well. And in general, I mean, we have not really touched on Ethereum at all, and it is an interesting coin to look at the moment because it also broke all-time high, if ever so briefly. It did. So, Brian, we can talk about Ethereum from a few different standpoints. The first thing to keep in mind, or sort of to talk about, I think, have been daily active addresses for ETH. And so when it comes to, when it comes to analyzing average addresses for ETH, it's always important to put it in proper context, right? And for Ethereum, that means the context of how freaking expensive it is to actually use the Ethereum blockchain and for these addresses to interact with the Ethereum network in the first place, right? So what I like to do to sort of put that in perspective is to overlay the average fees. Instead of average gas using way, we can just put average fees in USD. I think it's a more simple metric to show. And what we will be able to see is that Ethereum's, the average transaction cost to interact with Ethereum is still at $25. So that's average. Like if you want to, I don't know, put some of your stable coins in Yearn, that's going to be hundreds of dollars, right? Just as an example. So we're still sort of in this increasingly exorbitant sort of fee structure for Ethereum, where on a daily basis, the network is becoming super high, sort of only high ROI transactions are going to be interacting with the network, because otherwise, like if I, can wait a couple couple of days for the fees to calm down, I probably won't use Ethereum today, right? So small ROI transactions are probably going to be disincentivized from the network for the time being. And so what is interesting to me and what is hopeful for me is that even though Ethereum fees have been very high for the past month or so, we have seen over basically the last 2 weeks, we have seen a fairly strong uptick in its daily active addresses. So despite this rising fees, the amount of new addresses interacting with Ethereum in a 10-day span has increased by 23%. So there are 23% more addresses interacting with Ethereum between October 1st and October 21st, despite the fees staying relatively stable, minus a few outliers. So overall, I think that points to a relative strength in the general network activity for Ethereum. Strength that we have not really seen from Ethereum for quite a long time. Like if you compare this chart, right, with Bitcoin's daily active addresses, it looks a lot more choppy. And I think the reason why it looks so choppy is because the NFT sector, the DeFi sector, and all of these up-and-coming projects have, in fact, disabled a lot of potential use cases for Ethereum on a daily basis, just because the cost to interact with the network has been so high. So, seeing the fact that it's continuing to pump in terms of daily active addresses, even though fees are mega high, I think is a very strong signal for me. Is a positive signal moving forward, right? Now, as far as what might be sort of causing some of this sell-offs or sort of the reduction or decline in Ethereum's price in particular, we can zoom into Ethereum's exchange inflow. So over the last maybe 24 hours, there has been a bit of an uptick in the amount of Ethereum moving to known exchange wallets. The best way to show that would be to show Ethereum's exchange inflow and zoom in on the last maybe 6 months and take a 12-hour interval. And you will see a fairly significant uptick. So last 6 months, and then we can take a 12-hour interval. And what we are going to be left with is there we go, is fairly significant uptick in the amount of Ethereum moving to known exchange wallets at the local top, or sort of the new all-time high for ETH. So yeah, unlike Bitcoin, we've actually been seeing a pretty clear depiction of rising sell-side pressure for ETH. But as you can see, it's not like unrealistically or sort of unreasonably high. It's definitely on an uptick, but I would say that's maybe like a 50-60% increase. It's nothing outside of the ordinary, and I think it's even somewhat healthy. Like, yeah, it's going to lead to a short-term correction, but people should feel a little bit scared about what can happen to these coins, right? I think also, Brian, we can show active deposits for Ethereum. So active deposits in particular, we can show them on a different chart just to kind of visualize this a bit more clearly. Deposit contract of ETH 2.0 has 8 million. Yeah, I mean, it's the same thing, like the same logic that I just used for Bitcoin in terms of why I think the supply of Bitcoin and Ethereum on exchanges is going to keep declining. And Brian, let's use the daily interval here. Is because there's more use cases. So that might introduce a sort of supply shock at some point in time for both of these assets and lead to price appreciation like we are seeing right now. So active deposits also over the last couple of days seeing a pronounced uptick. Like I said, it's not exorbitantly high, but for example, in the last 4 days, there's been 31% growth in active deposits for Ethereum. So what that means, what deposits addresses are addresses that are being used to move Ethereum to known exchange wallets. In other words, there is a 31% uptick in the addresses whose sole purpose is to move ETH to exchanges. And then, the follow-up question is, why would you move Ethereum to exchanges, especially as the price is skyrocketing? And the potential answer to that question might be because people are looking to sell some of their stack. So again, another sort of a pointer and explanation for why we are seeing a short-term correction as we are right now. Similar to Bitcoin, Brian, we can also look at the social metrics for Ethereum, because both social volume and social dominance has peaked precisely at Ethereum's all-time high. So it was a short blimp in the social metrics for Ethereum, but it was clearly a strong signal that at least at that like maybe 12-hour span, the Ethereum was one of the more talked about topics and narratives on the within the crypto community. Generally speaking, like I said before, these spikes in social sentiment, they're usually pointers of like peak market euphoria. They also suggest that everybody is already hyper aware of the rally, so there's going to be less of a buy side pressure moving forward, and on the other hand, there's going to be some whales being spooked by the amount of euphoria, right? So kind of a perfect storm of shitty conditions. So generally speaking, another similar to Bitcoin, our metrics, social metrics in particular, have been showing increased retail interest, and in particular increased retail confidence. Historically has not been a good sign for Ethereum, right? So yeah, one maybe final thing to show will be, Brian, I think Binance funding rates for Ethereum, which similar to Bitcoin's have also I don't want to say skyrocketed, but they have definitely become relatively high over the last couple of days. Again, funding rates being high means that people are they have a consensus that this coin should pump more because they're betting on it pumping more. They're paying the opposing side of that contract fees because they are so certain that this coin is going to keep pumping. And when they're so certain that a coin is going to keep pumping, it's usually when the market starts punishing the greed. So similar to what we've seen with Bitcoin, on Binance, on Huobi, on BitMEX, on several other exchanges, Ethereum's funding rates have also started to skyrocket. It's a pretty this sort of event happens across the board. So not just Bitcoin and Ethereum, Litecoin, XRP, Chainlink, a bunch of other coins. They're all seeing an uptick in funding rates, suggesting that at this point in time, as we are talking, people are still fairly long. Now, similar to Bitcoin, what is positive is that we are seeing sort of a normalization of these metrics over the last 12 hours. So both social metrics as well as the funding metrics, or derivative metrics, are starting to chill out a bit. Actually, Brian, can you do a hard refresh of your page and show the FTX funding rate for Ethereum as well? Because it's a new metric and it's quite interesting. There we go. Guys, literally introduced today to the platform, FTX funding rate. So this is the funding rate specifically for the FTX exchange. We are seeing a largest spike in the funding rate since May. So again, a pretty clear indicator of where a average trader's mind is at, or where it was maybe 36 hours ago. It was in the clouds. Yeah, so what I want to see, very simply, I want to see these metrics completely drop to sort of a neutral zone. So I want to see social volume dissipate. I want to see interest in Bitcoin and Ethereum sort of completely lose ground. I want to see the funding rates move back to relatively neutral territory, suggesting that the market is no longer so predominantly bullish, and at the very least, they have some amount of fear. They're at the very least undecided about what's going to happen next with the market, right? And then on the other hand, what I would like to see for Ethereum is I would like to see its active addresses continue to push despite massive fees. That actually, I think, is an extremely strong signal, especially if it's able to do so over the next week as well. One last thing, Brian, that you might want to show is social sentiment for Ethereum, which, oh, sorry, I'm looking at Bitcoin on my end, but social sentiment for Ethereum is also decent. Yeah, there we go. So this last drop, don't take it with a grain of salt, because the last tick of data is still being calculated. So actually, yeah, ignore the last tick. We're looking to fix that. So only look at the penultimate tick. in the social sentiment, which shows that, yes, we are still very, very bullish towards Ethereum as a community of traders and degenerates. So yeah, don't. I don't know. I would like all of these metrics to see a major correction over the next couple of days before I would be extremely sort of confident in another leg up. Obviously, I could be wrong, but yeah, this is how I'm interpreting this data anyway. Brian, can we also look at Ethereum's MVRV ratios? Because I'm actually not sure where they are. Can you show us the 30-day MVRV?
Yeah, we're still up here. We're sitting at about 11.9%.
Okay, show us the last 4 years of data, please.
2017.
Okay, and let's take the daily interval instead of a 7-day interval. Yeah. Yeah. Okay. Still pretty high. I mean, no other way about it. And actually, I think Ethereum's 365-day MVRV ratio is going to be even more concerning. Can you show us the long-term ratio? In general, like it's already been at like 50% even before this rally. So I assume it's at like 70% now, 67%. All right, yeah, not great. Definitely sort of in the upper zone of high MVRV ratio. So for those of you that have maybe missed the first part of the stream, or that part of the stream has buffered for you, which is completely possible, what MVRV ratio tries to show is the average profit of a certain group of holders. So this metric is currently showing the average profit of all addresses that have acquired Ethereum in the previous 365 days. So they're currently up 67% in profit relative to their initial investment, on average. So the question that you need to ask yourself for yourself, then, that me, Brian, nobody can really answer, is whether you believe that at around 60 or 67, or let's round it up to 70%. So around 70% is the average profit margin of a relatively long-term Ethereum trader. Do you believe that at this point they're going to start taking some of the profits? Is 70% enough for them, especially given the current market context, right? And especially given the today's pullback. So what we can see historically speaking is that this isn't the complete or the total high for Ethereum's long-term MVRV ratio. It has seen sort of, it has soared to as high as 100 and I think 30-40% during this bull cycle. It's actually been even higher in 2018, but usually actually you see these long-term MVRV ratios sort of decline with every subsequent bull cycle. So I would actually say that the sort of the upper margin for the 365-day ratio is around 100 and 120%. So there's still some room to the upside, but it's like relative to most of 2018, most of 2019, and the first part of 2020, Ethereum's long-term MVRV ratio is already higher than much of those like time periods. So yeah, I can't, you can't say, you can't find a way to put this into a positive spin. It's definitely in the overvalued territory. Can it go higher? Yes, it can. It has before. But is there a relatively high risk based on historical data? Yes, there is, right? And there's also a relatively high risk in terms of the 30-day MVRV ratio, which is currently, like Brian said, around 11%. And it seems like it also likes to peak between like 15 and plus 25%. So both of these might be a little bit concerning. Yeah, we'll just have to wait and see where they sort of end up. I think the lower that they get, especially if Bitcoin continues to drop and it drops maybe to, like I said, let's say that 58 is resistance, 58K, which some technical analysts believe. So I think that would put Bitcoin's 30-day MVRV ratio at around like plus 4%. That's a decent position, possibly, if you believe that other fundamentals, if like other metrics, bearish metrics start to normalize, like social sentiment and the derivatives and MVRV. If they start to normalize, the low level of like between 0 and 5% MVRV ratio, the 30-day one, it could be an interesting opportunity to move back into the market. For now, it's still, at least for my taste, it's still a little bit too high. But other people have other sensibilities. It's all about what your risk profile is and how eager you are to move back into the market and how eager you are to buy the dip. Actually, Brian, speaking of the dip, can we look at the mentions of buy the dip now? Like we looked at it before the call, and there wasn't a whole lot of them. But there's been a, the Bitcoin has dumped more since we started talking. So can we see anything in terms of, okay, it's starting to pick up a bit. Yeah, just a bit. Yeah, let's take a look at the last month. Okay.
Nothing significant yet.
Yeah.
Which is a good thing, by the way. When the crowd actually is mentioning it's time to buy the dip, they are typically right for a very short period of time and then wrong long term. So the fact that it hasn't even gotten recognition yet would indicate that those who are buying the dip are not being vocal about it, and it's a minority of people who believe it.
So I think we might have time for just one more coin that we want to cover. Let me run over to the other side of the room just to get my charger. In the meantime, Max, can you give Brian a coin for us to look into before we end the stream?
Let's do it. So 2 non-ERC20s. We will go with what we have available. Obviously, there's not going to be MVRV. We will have social data. So we'll start with that and kind of go over funding rates too. For DOT first, what I'm seeing here is social volume is indeed up as you would expect. Let's go ahead and change this to price BTC because that'll give us a better idea of how much it is decoupled versus just the raw price that is going up along with Bitcoin. So switching to this.
Yeah, we might want to zoom into like the last 6 months or something because this is
that is way long term. So now we're at just the last 6 months. Price BTC, I'll just make it our usual green so there's no confusion. So yeah, what we're seeing right now is a mild uptick in social volume. A dominant spike that is really nothing special right now, and prices going up, which is a good thing. This means that there isn't really much crowd recognition of DOT despite it going up against Bitcoin as of late.
You can also just show it as a raw price of DOT just for us to like compare where the previous spikes were in terms of DOT's actual price.
Sure. So yeah, it's up near its, I believe, all-time high that happened back in mid-May of about 49.32. Yeah, this was definitely its all-time high. I remember because we posted about it last week, and we're sitting at about 44.50 now. So we're within about, give or take, 7% of it or so. And the big social volume spike came right about here, which was actually a local bottom. So looking at this, there was a lot of discussion related to, DOT retracing and the crowd recognizing that and assuming that it would continue to retrace. And with the crowd presuming that the direction would go in one direction, that is, as we've discussed on many of these calls, the time when prices typically reverse. You can see the same with this social dominance spike here and this social volume spike here. Look at the retraces that happened shortly after each one occurred. You can see right here on the nose back in mid-June, this was the big dominant spike where we had a massive retrace along with a lot of the other markets, admittedly. So social-wise, nothing significant happening for DOT right now.
I think that's quite. So what this means really is that like DOT is pumping and it's approaching a very interesting sort of resistance level, but it's the share of DOT mentions on crypto social media is actually not that high. So what that means is that I think for the time being, everybody is sort of peeled to the price of Bitcoin and where it's going to stop. So, nobody's looking at DOT at this point in time. Like they might be looking at it 2 hours from now, but at the time of recording, they're kind of just preoccupied with other topics. So it might give DOT a little bit more wind in its back for another push to maybe 49.50. Yeah, who knows?
Yeah, and going down to funding rate here, we'll look at FTX first since it's already queued up. The funding rate did get quite high back on the 17th. So about 5 days ago, right after it started to pull back from its 43.86 local top. It got down to about 41.92, and people said, all right, this mini dip is the time we're going to ultra long it. And when the longs were occurring, we had more retracements until the funding rate got back down to a normalized area. And then, of course, it shot back up. Funding rate got a little bit more excited, but nothing huge this time. And ever since, it's kind of been hovering just a little over its average funding rate. So if you were a big bull on DOT right now, you'd ideally want to be seeing it below this 0% line, especially back here. You can see the local bottom occurred on July 20th. And this was around the time that we had the biggest negative funding right over the past 6 months, with, of course, the mentioning of the May 19th one, where we just had ultra negative funding rates for just about every asset that we have funding rate on.
Yeah,
but
I mean,
overall,
you can even show Binance funding rates, I think, are even clear. So this is a bit noisy because I think it's a low interval for Binance funding rate. For DOT, it's showing some even more clear patterns in terms of local tops and where we are right now. So we're actually at around a neutral point, at least on Binance, which, like I said, I mean, I would rather see it here than see it at plus, I don't know, 0.08 or something, 0.01 or something. Sorry, 0.01. So, yeah, gives it some room to grow. Remains to be seen how strong it is against Bitcoin's pull, especially if Bitcoin, breaks below 60K. It's definitely a question of how many coins are going to be able to escape that gravitational pull in the short term. But from a few other angles, yeah, DOT is not looking terrible. Like, it's not looking as bad as some other coins that we might have talked about today. So, okay. Last thing we can look into is development activity for DOT, right? Because I'm seeing a pretty significant decline in Polkadot's development activity, like in the last 2 weeks. I don't know, maybe people are on vacation. Who knows? This is nothing to worry about. Like, if you zoom out to the history, the entire history of the Polkadot project, and just show us what is the development activity of Polkadot looking like it's fine. Polkadot is probably like in the top 10 or top 20 projects, according to our data, in terms of development activity this year, especially in the last maybe 3 months or so, if we exclude this latest drop-off. So yeah, if you are sort of from a value investing perspective, this metric is not going to tell you much in terms of whether we crash from here or we pump. What this is really showing is whether the project believes in this idea, or whether the team, believes in this project long term. And it's obvious that the Polkadot team is committed to the project. According to data from their public GitHub repositories, they are pushing code at a very significant pace. Like, these numbers in the right axis might not mean much to you because it's a sort of a unique score that we attribute to any project. But I would say anything above like 100 to 150 in terms of development activity is mega high. For a lot of like ERC20 coins, for a lot of coins on Ethereum, on other blockchains, anything above 150 is great. So yeah, we're currently at 63, but like I said, literally it could be that they've just went on a sort of team retreat or something. There's some sort of a conference for Polkadot. Like, there's usually some sort of an event. Like, for example, you can see back into beginning of 2021, you can see this big drop in development activity, obviously around the New Year's break, right? So it's probably a similar type of event where, for whatever reason, the Polkadot developers are taking a little bit of a hiatus. But yeah, overall, it's looking fine. There's nothing to worry about in terms of its sort of, at least its team staying true to the project and to the roadmap. So I think that's where we're gonna end it, Brian. Just because with all of the delays and whatnot, we're already like an hour and 30 minutes in or something. So
yeah.
Any final comments before we start signing off?
No, obviously, we apologize for the technical difficulties, obviously, with much of our team remote right now and relying on hotel Wi-Fi. There are going to be some complications, but for those who have stuck with us, thank you so much. It's always amazing for you guys to stick it out with us. Make sure to spread the word. Like and subscribe to this video. That helps us with the algorithm and help get the word out to more and more people who are interested in data-backed metrics like the ones we provide. So continue to do so, and also share that referral link, guys. You can go to account settings and send it in any sort of posts on Twitter or anywhere else in your communities.
So one thing to sort of mention is from Lam Paul. He says that I think long-term holders of Ethereum would have logged their ETH in the staking pool services and are looking forward to the 2.0 upgrade. So the chance of MVRV, the long-term MVRV moving higher can be high. I think there is something to it, but in general, like even if a lot of Ethereum or sort of long-term Ethereum is put into those services, you will see the any sort of signs of long-term holders that still are selling off, any sort of signs of long-term sell-offs will show up on the MVRV chart. So, it's not proportional in that sense. Gilham says, just joining, can you start over, please? You know what, Gilham? Like on a different day, I might just do it, but not today, my friend, not today.
Replays available, guys. You can watch the whole thing.
So anyway, guys, this was probably the biggest disaster of a stream that we've had so far. I really, first of all, I apologize to everyone from in terms of the buffering issues that we've had. Like I said, a few of us, actually quite a bit of the team is in a hotel. So the hotel Wi-Fi is super choppy at the moment, or was throughout this last hour. You guys are champs for sticking out with us until the end. Thanks a lot. We hope this was interesting analysis. We hope, we hope that Bitcoin recovers so everybody can be happy, but even then shorts won't be happy. So whatever your position is, we hope you learned something. If you like this type of information, make sure to check out app.santiment.net if you haven't already and become a Sandbase Pro subscriber. You also get access to our Discord Pro channel, where we will next week be announcing the next webinar. So every month we will be having a webinar explaining a part of our platform or some of the metrics on the platform and how to best use it for your trading strategies. So yeah, we've done a webinar on social metrics this month. Next month, it might be something about the screener. It might be something about exchange metrics. I'm not going to reveal all of it, but you will find out if you are a part of the Discord Sandbase Pro channel next week. So thanks a lot for sticking up with us until the end. We will be back sort of mid next week, so probably Tuesday or Wednesday with another shorter video, and then obviously on Fridays, 4 p.m. Central Eastern Time, we're back at it with the stream. Let's hope Bitcoin starts recovering, guys. Have a great weekend. Stay safe out there. Keep an eye on these social charts. They're looking a bit iffy. And yeah, talk to you in a couple of days.
Bye, guys. Thank you.
Thanks, everyone.